All right, Miss Aurorah is back. Happy Money Monday night. Happy Money Monday night. Miss Aurorah has everything going on up in here. Okay, secured entrepreneurs, we have to have the trust talk again tonight. Yes, we do. This is fitting because it is Money Monday, right? Okay, in this video, Miss Aurorah is going to tell all of the secured entrepreneurs just why it is uber imperative for you to transfer your life insurance policy into your irrevocable trust. Why is it that you need to transfer your life insurance policy into your irrevocable trust? I want to give a shout out to a new secured entrepreneur, Lady Guinevere. She has given Miss Aurorah permission to tell her story, and that's why we're doing this video on tonight. For those of you who do not know who I am, shame on you. Shame on you. Because you need to be liking, subscribing to this channel here on YouTube, sharing it, okay, sharing all this juicy information. You need to be following Miss Aurorah on Instagram. You know I'm Miss Aurorah Dey on Instagram. Hello, Aurorah Dey Consulting on Facebook. Stop playing, okay? So, I'm Miss Aurorah Dey, and this is the Secured Entrepreneur Movement. Okay, secured entrepreneurs, I have to tell you all what has gone on with Lady Guinevere. Okay, her father had an illustrious life insurance policy. Okay. There's so much comedy in the story, but I'm going to give the cliff notes. Okay, so her father became ill. He was in his 90s. Okay, so everybody's expecting it. You know how it is when the families feel as though they know where all of the documentation is. Everybody has a plan. We know what we're going to do. We've made these arrangements, and we know that the life insurance is going to cover whatever type of services we would like to have for him and things of this nature. Okay, so the surprise that a lot of people get is estate tax. For some reason, people don't want to believe that it's real. People don't want to believe that it's real. Okay. So, long story short, the family finds out that the proceeds of the life insurance policy is taxable to the father's estate. How many of the secured entrepreneurs know that tax could be as high as 40%? Yes. So this is a small shock to the family. Not only that, over the years, the father had a policy whereas he would borrow money against it. He was doing things, okay? And so there was a discrepancy as to what the proceeds would be, what was really going on. And I said, this is very fascinating. It's very fascinating because normally we are creating trust to control, we're controlling assets. And then upon our transitioning, we want to assure that the beneficiaries, individuals that we name to have some things later on in life, do not squander money, do not give away assets, don't sell the assets, don't mess around, right? In this case, it was the owner of the policy who was just doing some things that nobody knew about, right? So not only, are we messed up with the numbers, right? We messed up with the numbers, but then we find out about this tax that the proceeds were taxable to, the father's estate. Now, nobody really wants to go through that, and we shouldn't go through that, right? So this is how she was led to Aurorah Dey Consulting. After she asked all the questions and got all the information and started doing some homework, she said, I'm not going to have a repeat of this. But the story gets juicier. Okay. So the father was married. His wife transition before him. So see, in this situation, the husband and wife can transfer, this can be transferable between husband and wife. So the tax issue would not have been there, but there was no wife to transfer anything to. Okay, so it is for the beneficiary. So it appeared that, understanding that he had done some things, basically depleted the policy, and he needed a different type of policy, he did go and get one. However, it appears that he was unaware as to what he needed to do. It was different from the first one where he was borrowing against and things of this nature, which is why it's so important to have a knowledgeable insurance agent, okay? Somebody who's been in the industry for a long period of time. They know the ins and outs and all of this stuff, okay? Because clearly his goal was to transfer that particular policy into a trust. That was his goal, as the family has looked at documentation and some things that were written up. They really are unclear as to who wrote these things up. That's another thing, okay? Which is why Mr. Aurorah is always telling you about paper hustlers, okay? You don't know what the heaven is going on, all right? So it turns out that the father was under the impression that he truly did transfer the policy into a trust. But I want all of the secured entrepreneurs to know tonight that the Internal Revenue Service, they have a little rule. Yes, they have a rule. They have a rule. You can transfer ownership of a policy. That's all fine and good. We understand why you're doing it. You have our blessing. Keep all your money. No problem. But you better not transition within the first 3 years. Now, the last time Mr. Aurorah checked, we didn't have any control about when we were leaving the building. Okay? There is a 3-year rule. If you transfer your life insurance policy, okay, you would have to do it 3 years prior to your death. Like, don't even get herpes. It's a virus, people. Okay? You got 3 years, okay? Now, if somebody told me this, right, let me tell you what happens. Let me tell the secured entrepreneurs what happens. So, that's what happened to Lady Guinevere's father. He transitioned before the 3 years. Okay? So it's still taxable to his estate. I said, this. Mr. Aurorah can't make this up. Like, this is something that really happened. So, that's the first thing I want to tell the secured entrepreneurs tonight. That when you transfer your life insurance policy to your irrevocable trust, okay, you must follow the 3-year rule, which is why you want to do this sooner rather than later, okay? Because we don't know. And as we can see, there are lovely individuals leaving earlier and earlier. We know this, right? So, the Internal Revenue, I don't know what their vaccination is. I have to do some research. Somebody comment below. Okay? What is with the 3 years? Okay, so you must transfer ownership within 3 years. That's the first thing. Okay? The second thing that Ms. Aurorah wants to tell the secured entrepreneurs is you want to do the transfer to legally avoid estate tax. Okay? Let's get on with this. Especially if your estate is worth well over $2 million. Okay? You know that you want to transfer ownership of that life insurance policy to the irrevocable trust, because as I stated previously, the tax is well above 40%. Okay, so there are 4 things that you must not do once you have transferred ownership of the policy to your irrevocable trust. Okay, and this is some things that Lady Guinevere's family found that the father was attempting to do. Okay, so you cannot start trying to select the method of payment. Okay, because once the life insurance policy has been transferred over to the trust, the trustee is now responsible for making the payments. Okay, so you're done with that, right? You can't try to cancel or convey this life insurance policy to anybody. Okay, you also cannot try to change beneficiaries. You can't sit up there and say, I want to add this person, I want to take away this person. You cannot do these things once you have transferred the policy, because then that would be considered you are still having ownership. Okay, so you have to be very mindful of how it is now you're handling the policy once you transfer ownership. Okay, the other thing, once you transfer ownership and the trust takes over the ownership, all right, 3 things. You cannot be the trustee. Okay, you cannot be the trustee of the irrevocable trust. All right, and of course the trust must be irrevocable. Okay, so the trust must be irrevocable. You cannot be the trustee of the trust. And get this, Miss Aurorah cannot make this up. Miss Aurorah cannot make this up. That trust would have to have been created 3 years prior to the transfer. Hello, I said no wonder this man couldn't get it right. I believe he was trying to get it right, but he did not have enough information. He didn't have enough information. Okay, so I want all of these secured entrepreneurs. First of all, if you don't have a life insurance policy, please, it's imperative that you have a life insurance policy. I mean, there's no way of getting around. I'm telling you what. When I did not have one, I was actually very nervous at the time in which I really needed to get my life back on track and everything like that. I didn't want anybody to come and give me a physical, and my nerves were shot. But the reality is, I would be leaving other people in a worse condition, if I were to transition and they did not know what to do. And I'm letting all of the secured entrepreneurs know right now, Miss Aurorah does not want to be cremated. Please, somebody take notes, okay? I want some other stuff in any event, okay? So please, everybody, just go and do what you need to do. But Miss Aurorah is going to suggest that you have your irrevocable trust already prepared, okay? Because when it is that you have the trust prepared, when you go to purchase the policy, you can automatically and immediately have the trust be the owner of the life insurance policy. Now, I want to touch really quickly on one of the questions that another client had as it relates to naming the trust the beneficiary of the life insurance policy. Now, what I will say to that is, if in fact you name the trust the beneficiary, well, then you might as well give ownership to the trust, okay? Because you're going after the benefit. Now, everybody here knows that Miss Aurorah is the trust goddess. So there will be a link in the description box to get on to Miss Aurorah's calendar. Let's talk about setting up your irrevocable trust. Now, I know this, let me just answer this right now because I know this is about to come in an email. Why an irrevocable as opposed to the revocable? Well, for those of you who do not know, The revocable trust comes with absolutely no tax benefits. There's no tax advantages to a revocable trust, okay, which is why you have to have an irrevocable trust to transfer a life insurance policy into, because what that means is that you cannot tamper with the trust, okay? You cannot change the trust. Once the trust is created and it is irrevocable, that means you cannot reverse what is already there, okay? And that is the trust that comes with all of the tax advantages. Your family will have the opportunity to bypass probate altogether. You will be able to legally avoid the estate taxes, okay, which are very real. All right. So I just want all of the secured entrepreneurs to be very, very mindful that you need to start putting your wealth cycles in place. We're coming into 2022. Miss Aurorah is going to work with 12 more people in the next 39 days. Okay. And I'm only taking 12 people simply because it's a lot of work to set up these wealth cycles, because many of you know, you come on board and you have a lot of assets. You've got all kind of things in places, and Miss Aurorah has to help you, put things together. We have to get appraisals on just about everything that people have. It's really quite interesting. Okay. So the link is down below here in the description box on YouTube. All right. There's going to be a link in my link tree on Instagram, and I will place a link in the thread on Facebook. All right. So that's what Miss Aurorah wants to share with everyone here on Money Monday night. And you can find me at AurorahDayConsulting.com. And until next time, ta-ta.